Welcome to Market Momentum. Today, we're going to cut right through all the noise and really analyze the powerful and sometimes conflicting forces that are driving the markets, from the huge AI boom in stocks to some flashing red lights in precious metals. So, here's the big question on everyone's mind. Are we riding a sustainable AI boom, or are we teetering on the edge of a dangerous market bubble? To figure out where the smart moves might be, we're going to unpack the key signals across stocks, crypto, and even precious metals. Here's how we're going to break it all down. We'll start with that AI wave in US stocks, then we'll check in on crypto to see if it's at a turning point. After that, we'll look at the danger zones for gold and silver, and we'll wrap it all up with a clear market strategy. First up, the US stock market. Right now, it is telling a really powerful story, and that story is all about one single transformative technology. And this is really the heart of it all. This idea of an AI renaissance, that's the main engine that's fueling so much of the optimism we're seeing in the market, especially when you look at the tech sector. And this strength is pretty consistent across the board. After a few little dips, both the S&P 500 and the Dow are climbing again. But the real headline here, you gotta look at the Nasdaq. The tech index found some really solid support and is now basically leading the charge. So this isn't just one index rising, it's a broad tech-led recovery. So the message from the market seems pretty clear, right? This upward trend looks solid. For now, the strategy seems to be to lean into this momentum, especially with those tech stocks that are at the very heart of this AI boom. Okay, now let's switch gears completely and jump into a totally different arena, the world of cryptocurrencies. And here, the story is, well, it's a lot less certain. You see, the crypto market is trying to stage a comeback. We're seeing this push upwards, but it just keeps hitting a wall at these key resistance levels. And what that tells us is that there are still some pretty significant risks out there, and that this is a time for careful observation, not necessarily aggressive buying. And if we drill down on the two biggest players, we see slightly different things happening. Bitcoin is kind of knocking on the door of this key price barrier, but it just can't seem to break through. Ethereum, on the other hand, is actually flashing an early internal buy signal. But even with that little green shoot, the wider market risks mean the advice for both is basically the same. Be patient. This turnaround just isn't confirmed yet. All right, let's pivot over to precious metals, starting with gold. It's had a fantastic run, no doubt, but that very success has pushed it into what you might call cautionary territory. So to really get why gold is raising some red flags, we need to talk about a tool called RSI bands. Just think of it like a speedometer for the market. When that price needle pushes way up into the upper band, it's a warning that things might be overbought, which is just a fancy way of saying the rally could be running out of gas. And guess what? That's exactly where gold is right now. The price has gone up so far, so fast, that it's now hitting that upper band. And why is this dangerous? Because history shows this is the point where the easy gains are probably over, making it a super risky time for new buyers to jump in. And hey, you don't have to take my word for it, just look at the pattern. Back in August 2020, it hit the band and then went nowhere. October 2021, same thing, a 2-month stall. And again, just this February, the price went stagnant for months after touching the band. The lesson here is pretty clear. This isn't a launch pad for more gains, it's looking more like a ceiling. So what do you do? Well, the strategy becomes pretty straightforward. If you're already holding gold, the thinking is, you hold on. But for anyone thinking about buying in right now, the data is sending a really strong signal to just wait for a better entry point. Definitely don't chase this rally. Okay, so now let's turn to silver. It's showing the exact same risk signals as gold, but, and this is a big but, it comes with an extra dose of volatility. To really understand the extra risk here, think of silver as gold's more reckless, younger sibling, When there's a rally, it rockets up way faster. But when the market turns sour, it falls so much harder, and it has a really tough time getting back up. That massive downside is what makes the current situation so precarious. And yep, you guessed it. Just like gold, silver has now stepped into that same overbought danger zone on its weekly chart. And given silver's history of these dramatic price swings, this is a warning signal you've got to take seriously. And if you want to see a picture of just how dangerous this can be, just look back at 2011. After silver hit this RSI zone, you can see it had one last breathtaking spike of 20%. But then look what happened next. A complete and total collapse. The price just crashed, and more than a decade later, it has never even come close to reclaiming that high.
That's the extreme risk we're talking about today. Okay, so we've got bullish tech, we've got hesitant crypto, and we've got overheating metals. Let's pull all of this together into a clear, actionable strategy.
This table really lays it all out, nice and simple. We have three completely different stories playing out at the same time. For tech, the AI momentum says the trend is your friend, so continue. For crypto, all the uncertainty means it's probably a spectator sport for now, so watch. And for precious metals, those overbought signals are crystal clear. Hold what you've got, but be extremely cautious about buying in at these levels.
And all of this leaves us with the one critical question for the months ahead. Which of these powerful trends is going to win out? Is this AI revolution going to keep defying gravity? Or are the warnings we're seeing from metals and the hesitation in crypto signaling a broader storm on the horizon? Thanks so much for joining us for this market breakdown. If you found this analysis valuable, we'd really appreciate it if you'd subscribe and like. It helps us create more explainers just like this one.